All right. Thank you for tuning into the Equity Channel, where we provide the highest quality stock market analysis to individual investors. Our goal is to help you improve your returns while keeping you up to date with everything that you need to know. What helps investors beat the market is information and knowledge of how to use it, and we'll provide you with both. Before we get started, be sure that you subscribe and to turn on your notifications because every time we drop a new episode, money is made. All right. Now, if you are joining us for the first time on Clubhouse, click the link at the top of the room and hit watch us on Twitch. All right. And you will be taken over to the live stream. I'll give everybody a few seconds to get over. All right. Everybody a few seconds to get over. That way, you don't miss anything. All right. Give y'all a few moments there. When you get over to Twitch, just drop some emojis in the chat or some emotes in the chat, so that way I know you're there, and that way I know when to begin. All right, let's go ahead and do that for me. Cecily with the resub on Twitch has been subscribed for 15 months, which means we've been going for 15 months live on Twitch, guys. Not bad. And you know what? Well, that's a hell of an emote in the chat, by the way, Cecily, to let us know you're there. For the rest of you folks, don't forget, drop an emote on chat so I know you're there. Drop an emote, drop an emote, drop an emote. Drop something, drop anything. Oh, okay, that's what y'all doing now? So shout out to Shay for the resub as well. Also 15 months. They just wanted to they just want to show up their street, guys. That's what it is. They ain't slick. They not slick. What's up? What's up, Moji? I see you over there. All right, all right. Okay. Moji also has been sub for 15 months. Oh, it is around that time, isn't it? I guess it is. What's up, Yolanda? Shout out to Moji for huh? Yeah, definitely, definitely, definitely. I see Kenneth over there as well. Okay, okay, okay. All right, there goes April. All right, now I'm starting to see you guys pop over. Okay. Jay Crispy also resubbed for 3 months as well. He's on a 2 month streak, but he's getting there, y'all. He's getting there. He's getting there. All right. One thing I know for a fact, this was the perfect month to get started because I think Value Investing 101's been going pretty well. It's been going pretty well. All right. Let's get this show on the road, guys. We don't wanna keep people wait. Hold on one second. Shout out to Yolanda for the resub as well. 14 months. Okay, 14 months. You know what's crazy? We're like this close to filling the hype train for the first time. Very close. We'll see what happens. Yeah, it says about to beat your last record. Keep up the support. It says so. We're this close to breaking our last record for subs in the stream. All right, now let's get this thing rocking, guys. Okay. Um, the only thing that matters. Um, I decided to name the. I decided to name the this particular module of the Value Investing 101. The only thing that matters because that's exactly how I want to feel about that catalyst. That one thing that I find that can really uh, show me like what's going to really drive my returns. over the next, year, 2 years, 5 years, 10, right? Like what's that thing that's going to drive these returns for me, right? That is, in a nutshell, what we're really discussing here, right? It's a single event, factor, milestone. Um, 80% of your investment is going to be dependent on this thing, right? It's crucial. It's not just important. You, what you're looking for, um, is throughout your research, you're looking for that list of things, that group of things that matter, and you want to have the ability to boil it down. All right. Let's get right into it. So this is where I was saying earlier, I kind of figured out finally how to have this discussion. And it is essentially to focus on how do you find that one thing? How do you find it? All right. For one, it has to be both high probability and high impact. Nothing speculative. Let's be clear about that first. Let's write these things down as we go along, right? It has to be both high probability and high impact. Um, you don't want something that's so speculative that you don't even know if it's going to happen or not, right? But something that's right there. Um, right? You don't want that one thing that you only heard about, whispers in the streets, right? That's never the one thing. That's the one thing that somebody's got in the back of their mind that nobody knows about, right? Um, oftentimes, oftentimes, it has a lot of consequences behind it. If they don't get this done, right? It's it's probably a dunzo, right? People are gonna sell this stock off really hard, like what you see happening for companies who are waiting for FDA approval, for example, right? Oftentimes, the stock rallies because people think that FDA approval is on the way. But then what happens if that FDA approval falls through? The stock then plummets. So that's one of those things that's really easy to figure out what that one thing is, right? But for those types of companies, that one thing could be a moving goalpost at times, meaning today it could be that one thing, tomorrow it could be another thing, because those companies tend to have to keep, shifting the focus. So you have to keep that in mind. Depending on what kind of company you're working with, it's going to be a lot more difficult to find that one thing. Um, then we have it has to be tangible and measurable, right? It can be defined by concrete dates, metrics, or announcements, right? So it's something that we can actually see happening. In other words, right? Like I talked about Adobe and their um, shift towards business marketing, for example. Right. Over time, I'll be able to track the success of SEMrush. I'll be able to look at the SEO part of their business, which I believe is going to play a big role in the future. I'll be able to tell how it's being adopted, how it's made shifts in the way that other people, like companies, um, are picking up on bulk items? Like, are they going with the entire Adobe suite, or are they still focusing on this one thing? Right, for them, I should say. Right. So what I looked at is this focus on marketing should lead to more bundling of products and enterprise workflow for Adobe, right? So I can track that. I can say, okay, let me, as time passes along, let me see how many people are adopting the full on, like the full deck, right, so to speak. The pivot point, once resolved, right, the future trajectory of the investment becomes much clearer, right? And we'll talk a little bit about that in a few moments. But often, but not always, it could be external. So it's not fully in the company's control, driven by regulations, market shifts, or tech breakthroughs. So, you know, um, so the reality is that 1 second here, gotta get somebody out of here. So the reality is that oftentimes that like I said, that one thing is outside of the company's control. You know, okay, cool. People are betting on full self-driving for Tesla. If you thought that full self-driving was it for them, it's going to be the biggest thing that they've ever done. Um, and autonomous robo taxis was going to be the biggest thing that they've ever done. Then you know you may want to track like the adoption of robo taxis as a whole, and you know government bodies and how they're allowing these robo taxis in general to infiltrate their cities. Then I can focus on Tesla specifically. I can do it like that, right? Now, I find that it's best to take this in 3 easy steps here. So the first step is to list key success factors. List everything that needs to happen for the investment to be successful. All right. List everything that needs to happen for the investment to be successful. Now, the growth of the market, the specific customer adoption, like I was talking about with Adobe there, right? Regulatory approval, product launch, all that kind of stuff, right? Like what what needs to happen here for the business to be for the investment to be successful? Like for me to look at my investment in 5 years and see, and say to myself, well, look at how much growth there's been, right? Is everything on this list of equal importance? That's the question you got to ask yourself. Is everything on the list of equal importance? Right? Now, imagine each factor from step one fails, right? Which is the one single failure, right? That makes the entire investment worthless. Right? So you kind of work your way backwards now and say, okay, cool. These are the important things. Now, if this didn't work out, like for example, let's say that let's go back to Tesla for example. Let's say that Tesla's energy segment didn't work out. Is that the make or break for the company? I would argue the answer is no. It is not the make or break for the company because they still make most of their money selling cars. Um, Now we may say, well, what's the fastest growing segment of the company? So maybe energy was the fastest growing segment. So maybe they have some growth issues down the line, but you know, and until we get to the point where the growth of their vehicle sales ceases to exist, then they can still depend on that to deliver returns to their investors. Um, then you say, well, which one failure ends the game? And so you isolate that thing and you focus on that. Um, you focus on that and you just go with it, right? So I'm gonna track that continuously, and I'm gonna continue to like have all of my research end there, right? It may even begin there and end there. I'm still gonna research other parts of the company. I'm still gonna focus on those things, but in the end, I wanna look at that make or break thing in a in a sole space, like by itself, right? And as a sole piece of research. And every time I sit down and take a look at the company, that has to be the one thing that if I don't research anything else, I research that every single time, right? So I could actually, you know, in actuality, not care about much else except for the health of the business, the financials, and that one thing. I could do that all day long and be just fine. But I have to know when that one thing is shifting. Okay. Okay. Um, so how do you list these key success factors, right? And I made sure this was put down for novices, right? So listening to earnings calls, right? Focus on the management's stated priorities. All right. What do they say the priorities are? Read your annual reports, your 10Ks. Look for reoccurring themes and challenges. Okay. Look for reoccurring themes and challenges. All right. Now, um, when you find out that something is extremely, when you find out that something is extremely challenging for the business, um, that ends up becoming a thing. It doesn't have to be the one thing, but it ends up becoming a thing to focus on. I got it already. Thank you. It ends up becoming a thing to focus on. All right. Um, and eventually, as you start to look at all the things that there are to focus on, you'll start to be able to piece it together. All right. What the most important thing actually is. And you can tell based on the analyst statements and things of that nature as well. All right. So I always like to look at the Q&A segment. Um, and I like to put that together also. Now, um, you can perform SWOT analysis, right? That's strengths, weaknesses, opportunities, and threats. But in this particular case, focus on the opportunities and the threats, right? Though, like those are the two things I focus on when I want to find that one thing. Everybody understand that? Now, if there aren't, if I don't think if I don't feel like the one thing is there, then I would usually find that one thing in the strengths and the weaknesses, potentially, right? Maybe there's something that the business is very strong at doing, but if they remain strong at doing that, it just works out over the long run. Like, take Apple for example, right? I think we all know what Apple does really well, right? And if they can continue to do that over the long run, that's going to continue to play out, right? Um, yes, yes. the growth has to stay there, right? So they can't just stop growing. But in the end, as long as they can continue to deliver these cycles of new device adoption, it's a think, make, break, repeat. That's how we look at it. I learned that in a design class actually. Think, make, break, repeat. So they to think of something, new that they want to, get out there with their next model and things of that nature. They put it together, right? And then they break. And as they as they break this product out there to the public, you know, um, they're also at the same time giving you what is almost like a mock or a prototype at times where it's going to be perfected while it's in the palm of your hands based on the data that they're getting back from us about how the utilization is going, right? And a lot of companies do that nowadays. So um, you would structure your list around market demand, um, around the competitive edge, the the execution plan, and any major risks. So that's just a little tip if you want to, find what those things are pretty easily. Those are some things that you can look for. Um, you know, so finding the catalyst is like the beginning, right? And this particular playbook is like more on the novice level, so you can always take it beyond this point. But this is just to get you started. All right. Um, how to apply the reverse elimination. So you got your full list now that was created in step one. Then you start doing the failure scenarios, right? Does failure of this specific factor prevent all other factors from mattering? If the answer is no, then done. Like so, right, and I'm just going to keep using a lot of the same examples. Go back to Tesla. No, the failure of the energy business doesn't stop everything else from mattering, but a failure of the car business will stop everything else from mattering. Car business fails, and it's a wrap overnight. Right, done. Um, so obviously, while people focus on, you know, all these other future things that are going on, you know, I look at those as things that matter. They're important things. Um, but the one thing focused for me is that they can still maintain their car sales while they try to work on those other things. That would be the one main thing for me. Right. So yes, get your robo taxis done, get all this stuff done. Let me know when they actually are done. In the meantime, please keep the car sales going. All right. That fails, everything fails. All right. And we'll discuss that in a little bit to see if anybody agrees or disagrees. All right. Now, the outcome assessment comes next, right? So what would happen if that one thing fails? So, you know, what's the one thing on that list that if it failed, you believe that stock would drop with to infinity and beyond, right? New Toy Story is out. Let's do that, right? That stock would drop for an infinite amount of time if this one thing fails. What in that list would do that? I go back to the car sales again, right? Uh, which failure leads to the largest potential loss? That's essentially the last. That's the gist of the question that you're asking yourself, right? So validate the potential stock impact, check for the domino effect, focus on clear, undeniable failures, right? Um, so you can do, like uh, what to do once you isolate the catalyst. You're gonna, like we talked about, you're just gonna keep your research going, right? You can set up Google search alerts to let you know when that thing pops up in different news. Um, you can create a dashboard if you wanted to that that actually gauges how things are going for this particular item. And, you can just establish a framework for decision making, right? In what way do you believe that this is proving to be a failure, right? So you know, what's your limit in terms of a loss, right? What's going to be your sign that let's say the stock starts to drop, right? For me, well, the entire market better be coming down with you, right? Or I'm going to already start to see some red flags here, and then, you know, again, you go right back to that one thing and find out how well is that thing doing right now? Is it failing or what? Okay. Now, um, here's here's something that is, you know, a more interesting thing, like what's some other questions that you can be asking to really spark your thought process, right? So, what is the one thing they need to keep getting right or else? What is that? What is that make or break thing for the business? Right? What's keeping the lights on? Like I said, like when we think about Nike, is anything other than shoes selling sneakers keeping the lights on? Right? What's really keeping the lights on over there? Um, you know, what is the one thing that if they keep this going, they will be in business forever? Right? Who's the one competitor to look out for? Have you asked yourself that question? Is the one thing in the qualitative or quantitative side of things? Meaning, could it be a heavy debt load that, like, I've seen companies where I'm like, yo, if only they would pay off this debt. I've seen companies and I've said that. If only they would pay this debt off, man, I think the stock would explode. All right. And I would check and I'd say, you know what, they do seem to be paying off the debt. If they keep paying this debt off, I think this is going to be a winner because everything else is perfect. So I'll make the investment. And the one thing I check is, are they paying off the debt? And I'm checking that continuously. So as long as they keep reducing that debt burden, what's that going to do for me? It's going to increase my equity ownership of the company. So every time they pay off $1 of debt, that dollar of debt they pay off gets split between all the shareholders. Okay, in terms of equity, that ends up on the other side of that. Okay, so the debt holders, they they don't they don't actually the debt holders don't actually control as much of the business as they used to if the debt's being paid off, which means that as the profits come in, less gets split with the debt holders, more of that gets split with the equity holders. It's a beautiful thing. So these are some really great questions. I would snapshot this page if I was you, by the way. Just snapshot the page. Okay, let me give y'all a second there. You want to snapshot this page? Trust me. All right. Snapshot this page and you know, use these questions to help you out here. I'm gonna give y'all a second. All right. Now, last but not least, um, this was another piece that I have always tried to figure out how to get that point across. There's there's the one thing from your perspective. Now, this is added on to the one thing that matters most. This gets added on to that. This is a personal preference of yours, right? And you get the point when I bring this out here, right? So, what's your personal make or break there? All right, one second. All right, so what's your personal make or break there? Beyond business operations, what do I personally need to see from this company for it to reach its highest potential? Yes, sir.
Yeah, one. Can you remove that stock ticker off the
What stock ticker?
uh well, I see a stock ticker going across my screen. So it's on your
Oh, there's nothing below that. There's nothing beneath that.
oh, okay.
All right. So my what's my personal need to see? Like what I need to see from this company, right? For it to reach its highest potential. What do I need to see there? Um, the best case scenario catalyst. Examples of catalysts that I would prioritize as best in class for maximum value creation. Right. Um, Focusing on internal strategic initiatives rather than just competitive responses. Right. Like
I get what you mean. Go sorry to interrupt. It's like when your screen is fully expanded because of the ticker, we can't see what the ticker's covering.
right. That's what I'm saying to you. It's not covering anything important. That's what I'm trying to say. Um,
Okay, so we shouldn't worry about
yeah. Right. Yeah. It's not.
it. Okay.
There's not. Yeah. I design everything to make sure that everything important is above that. Right. Yeah.
Okay.
Gotcha. No problem. No problem. No problem. Yeah. I know. Hey, I know what he meant though. All right. So now, um, the the reality here, right, is there's a few things you can look at. So number one is the radical product innovation, right? Moji, that's something seeing that you just spoke there. That's something that you talked about, right? You're like, Apple's not innovative anymore, right? So for you, this could be a primary one thing focus from a personal perspective. Whatever company you invest in may need to have radical product innovation, right? Must be doing this, right? Um, Vertical integration. This is something that matters a lot to me. I'm not going to require it from every company, but certain companies like in manufacturing and those types of things, I love to see vertical integration. I want to see them being in control of more of their business. I want to invest in a company that um, they mined coal, then they ran their own storage facilities for the coal, and then they also owned their own shipping company that took the coal all around the world. Now that is vertical integration at its finest, right? Leadership in environmental sustainability. Maybe that's important to you, right? These are just examples, okay? These are just examples. Or data-driven customer experience. Um, I was talking to a young student of mine earlier today, and and I would have him, take a look at this show called The Prophet and get his mind flowing on how businesses work, right? And you know, one of the episodes he watched recently, these people sold plants, but some odd reason they were ignoring all the data and all the customer experience aspects. Like somebody walks into the store and their cash register is way in the back, which may or may not be a problem in that sense. But then the customer can't say, "Hey, what's this? What's that? What's this? What's that?" And so it was suggested that they put the cash register in the middle of the store, right? So now you're equal distance away from everything, right? Like little things like that, just move that here. Um, like maybe your one thing for you is that the customer experience has to be on point. So when I look at certain businesses, certain brands, that's one of the things that I look at there. All right. So now let's let's go ahead and get into it. Our example of the day is going to be Nike. Um, Stock has been getting, absolutely hammered. All right. And the question has to be here, well, what's the one thing that's going to get them back on track? Right? Now that's not how I'm going to ask the question. I'm going to ask the question the same way I'm going to ask it for everybody. The one thing to make or break, what are we focusing on, so on and so forth. So here's what I'm going to do. The first thing I'm going to do is I'm going to go and I'm going to let's go to the profile tab here. Okay. And we're going to go to the filings. Let's start with the transcripts, actually. We're going to start with the transcripts. Let's see here. Read full transcript. Download. No, we can't download. Let's go to the full summary right here. All right. Now, progress continues on strategic turnaround with deliberate actions to improve business health. Focus on efforts on removing unhealthy inventory. This was the one thing that I was focused on. When I last analyzed Nike, the inventory management was not very good. So to me, the one thing focused for Nike was not just having the right inventory, but also managing the inventory better. Right? Running and football segments leading the comeback, up 20% for the quarter. All right. So one would argue, if I was to read deeper into what's going on with Nike, would I find out that they're focused more on like inventory in this area and less in some of the other areas. All right. Innovation remains a core driver with new platforms like Nike Mind and Aero Fit introduced and strong consumer demand for new products. All right. So we'll find out more about this in a few seconds here. Um, Risk factors, elevated markdowns, and promotional activity continue to press gross margins. So again, this is another inventory issue. This is all inventory issues right here. This is another inventory issue. Basically, they have so much inventory backup and so much mismanaged inventory that they're having to just put everything on sale, mark it down, and just try to get it out the door, right? And then you have the tariffs to add on top of that, which doesn't change, doesn't help much, right? They're paying $20 to $30 million for employee severance. I mean, can they even afford that right now? But we know this is temporary, so this can't be the one thing. This can't be the one thing focus. Is this the severance? So see, I'm going through here, and I'm going through the list of things that they have going on, and I'm looking and I'm searching for that one thing. I've already identified it so far, but I'm gonna keep going just to see if there's something else here. All right. Um, So ongoing restructuring of lower fixed costs. All right. New leadership in place for, pretty much emerging markets in Greater China. Major product launches and innovation platforms, including Nike Midair. Yeah, blah, blah, blah. We got that. No specific capital allocation or financing actions detailed beyond cost restructuring and SG&A management. Sportswear remains a large and vital part of the industry, but is currently a headwind for growth. that kind of sucks because that's what Nike does. All right. Performance categories, running, football, basketball, are showing strong momentum. All right. So industry outlook remains positive with long-term growth opportunities in athletic and sportswear markets. Okay. So let's be clear about something here, right? So we've seen some of the things that's being claimed that Nike can do here, right? So the main let's go over the three main things here. Let's go over the three main things. Number one is the hold on one second, guys. April, you said that other guy. Are you talking about Peter Lynch? I'm hoping that other guy isn't Peter Lynch. Don't do Peter like that. Cecily, correct. Like Jack Henry and independent banks, that's got to be the make or break. That consolidation has to cease to exist. It has to. We cannot continue to see consolidation of banks in that industry. So that's the make or break right now is that these independent banks stay in business and keep adopting their software. Period. Right? April, I'm waiting on your response. I'm waiting on your response. Tell me you're not talking about Peter Lynch. Oh, okay, you can't remember. Okay. Um, we'll come back around to that one. I don't know if you're talking about Peter Lynch, Charlie Munger. Um,
I'm sorry. I love how you stopped the whole class to address that.
Right, listen, Peter Lynch is that guy, you can't just be like, oh, that other guy and talking about Peter Lynch, I just had to. Anyways, so back to Nike here, right? So the three things that really matter the most when it comes to Nike, right? The three things that matter the most when it comes to Nike here, it seems to be inventory management and the forced markdown of that inventory, which is leading to pressure on gross margins. That's okay. That's number one. Number two is the tariffs and the trade disruptions that are going on from other geopolitical conflicts. And then the third thing, which is really a positive for them right now, that is the growth that they're seeing in, in football and running, right, in the athletics department. That becomes the three main things, right? Now, the inventory, I would say, is certainly it's been an issue for quite some time. We would hope they would get it done soon enough, but for now, that is priority number one for me. I want to listen to an earnings call and hear that Nike's not having inventory problems anymore. That's what I want. That's what I want. Let me hear one earnings call where they're like inventory issues over and done with.
Absolutely. I'm right there with you.
That's it. Because telling me that you're doing better in running and football is like, well, I mean, duh, like you're Nike. Okay. So that can't be the one thing for me. because they could easily do better in football. You know, I mean, pretty much almost everybody in football wants to wear, Nikes. Almost everybody, you know. So I'm not surprised there. As long as the leagues keep growing and expanding overseas, it's going to lead to more people wearing Nikes. Period. But now they got all this inventory that they're going to have to just keep writing down and marking down, and who knows what that loss is going to look like when it's all said and done.
It's, um, the sport in the sports department,
Hmm.
us, financial, right? But what I discovered or with peers is how the people that just wear like comfort and display statements, they have something called OCUS.
Hmm.
And that's like been taking over like the leisure wear, like
Yeah, that's Deckers. Deckers. That's the company that's selling them. Yeah. So so that answers that. So we had that one question. Well, who's the one competitor to worry about, right?
yeah, because when like 2 years is like sure not even that long ago, but like now they can, people are wearing it like us.
Yeah, I mean, we'll see how long that trend lasts, but I mean, at the end of the day, it doesn't help the situation at all.
So,
All right. So we'll see. We'll see. Um, so let's grab some of these 10Ks here real quick. Give me a second here. So to these filings. All right. And we're just gonna download some of these. So this was a quarterly report here. So I'm gonna download this 10Q. All right. Annual report right here. Let's download that. So I usually download at least 3 reports. So if it's that there's been a bunch of quarterlies in between the last annual, then I'll take the quarterly and 2 annual reports. Okay, and here's the next one right here, 2024. Okay. All right. Okay. Now, let's go over to Gemini real quick. Let's upload these files here. All right. Now, a second here. Mhm. Now, this prompt that I'm about to to place in here on the Gemini, um, you can if you're a subscriber on Twitch, you can find it over on the Equity Channel Premium in the top AI prompts. All right. Let's also keep in mind that you can go ahead and you can plug this in on you can plug this in on you can plug this in on the Quarter app as well. All right. And what I would do on the quarter app is I would add to the end here. Take this, and I would put like on the latest, you know, earnings calls and analyst Q and A's, right? But we have our 10Ks and 10Qs right here. Let's go ahead and run it. We're gonna go flash extended here. All right. Go ahead and run that. Just let that play out. So what I'm doing right now is I'm kind of double checking myself. I want to see if there's anything. Hold on one second. Let me pause that actually. One second there. All right, let's try that again. All right. So basically, I'm kind of double checking myself here. And I want to see exactly how this, like how this company is viewed from a lens of just kind of like going straight for what we're looking for here, right? So based on the 10Ks, MD&A and market risk analysis, the 3-year investor experience. So this is one thing I look for. I asked for the 3-year investor experience. So over the past 3 years, what has it been like for investors? I always ask that question because I want to know what their journey's been like. Right? Like if you were standing online for a roller coaster and everybody started walking off the roller coaster with nosebleeds, are you getting on? Anyone?
Absolutely not.
Right? Like that's a no. Like, wait, why is no, we're not everybody's nose is bleeding. We're not going on there. That seems like it's a problem. Right? So that's why I asked for the investor experience, because what I want to know is what has it been like for these guys so I can kind of get a glimpse of what it might be like for me. So, fiscal 2023 to fiscal 2024, investors experienced a stabilization phase. Total revenues held flat at roughly $51.4 billion. Margins expanded by 110 basis points to 44.6%, supported by aggressive strategic pricing actions and a drop in pandemic era ocean freight rates, which neutralized higher product input costs, and an $11.1 billion inventory footprint. Okay, so some things were able to neutralize that inventory footprint in 2023 to go into 2024. Fiscal 2025 realities, the narrative degraded severely. Total revenues dropped 10% to 46.3. Gross margin contracted by 190 basis points. Okay, to 42.7%. The erosion was driven by accelerating markdown activities with Nike Direct, an influx of sales returns and promotional discounts extended to wholesale partners, and rising inventory obsolescence reserves. Now, here's what was interesting about this, guys. Myself and my students, we actually did a study on Nike in which we did the inventory management analysis, and we saw these issues and we were able to sidestep these issues before it got really bad. So that was pretty interesting that this becomes one of the biggest issues that they're facing right now. All right. What we saw was that it was taking them much longer to get rid of their inventory than it used to on average. That's what was happening. All right. And so we could see that problem glaring. Maybe one of these days I'll show you guys what that looks like. All right. We have the return on capital illusion. So return on invested capital temporarily surged from 31.5% in fiscal 2023 to 34.9% due to lower active units and asset efficiency before collapsing to 20.2% in 2025. Thus, operating overhead failed to scale down with lower demand volumes. All right. Now, macro volatility headwinds across all 3 years, volatile foreign currency pairs consistently created net translational drags on earnings. That is the euro, the British pound, the Chinese yuan, and the Japanese yen. These required a continuous multi-band cash flow hedging program that masked deeper structural shifts in consumer appetite. All right. So year-over-year report differences. Check this out. So the critical systematic degradation. So the collapse in demand. Let me do this real quick here. All right, here we go. So the collapse in demand and discipline, Nike direct digital sales dropped 20% in 2025. Gross margin fell to 42.7%, erased by markdowns and inventory reserves. S&P officially downgraded Nike's credit in July of 2025. I don't even remember hearing that one happen. See, look at that. You find out something new every day, don't you? Last year.
That's right.
I didn't catch that one. Yeah, wow. Okay. That's very interesting. Structural reorganization disclosure dependencies. So 2024 reports featured a mandatory $443 million enterprise restructuring charge. In 2025, Nike completely removed its wholesale equivalent revenue metrics, shifting reporting directly to standard GAAP segments. Overhead expenses fell 7% via workforce reductions, so that was good. They reinvested directly into high cost demand creation, signaling an increase, an aggressive race to buy brand momentum. Sweet. So what's that one? So have you picked up on one thing? Like I mean, you can see these things that are focusing on right now, right? So let's keep going. So the company trajectory, and catalyst tracking. So Nike is the world's largest designer, marketer, and seller of athletic footwear. Right, we know that. Historically positioned as a direct-to-consumer juggernaut via its Nike Direct channel strategy, the firm's strategic trajectory is undergoing an emergency rebalancing. Under the incoming CEO, Elliot Hill, October 2024, the business is unwinding its single-minded focus on digital platforms, returning focus to its core wholesale route network, and shifting away from lifestyle saturation back to. That was crazy. We talked about this, right? We said that was a bad idea for them to just start to try to like, oh, we don't need these wholesalers. Like they were tripping with that. Like, what are you talking about? Like who at Nike thought of that one? Matter matter of fact, right? I know this wasn't exactly digital, but think back to East Bay. If you know, you know. There was one point where East Bay was it,
Yeah.
right? But are we as consumers that involved in that way that we want to do it that way? Like, like I feel like we still like to, go slip on a pair,
Yes. I do.
Yeah. Like so
I have to see how they look on my fingers.
right. So I mean, I feel like that was just a bad idea. I felt like people still love that experience of shopping for shoes. I'm sorry, like Nike. Yeah, congratulations, you played yourself. All right. The tariff erosion, we know that. The wholesale credit and returns vulnerability. So broad customer concentration. The three largest U.S. accounts compose 25% of domestic sales, forcing Nike to absorb higher returns and pricing discounts. Okay, so people returning sneakers and stuff like that too. That was happening. New federal trade, huh? Yeah, but
That highway. Just
so basically, right, exactly right. There was a large increase in it. Yeah. So basically, what happened was it was just they had like these three broad customer areas that they were focusing on that had like 25% of their domestic sales, and those particular customers, which I believe was Nike Direct, by the way, tended to return shoes a lot, right? Which goes back to would have been better if they would have went to the store and slipped them on first, right? It's quite possible that they were just like, oh yeah, these ain't working for me, and send them back, you know, which they probably didn't think that would be a problem. All right. New federal trade import policies, blah, 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 product portfolio cannibalization, lifecycle management, overhang, where lowering the volume of legacy franchise products actively reduces short-term revenue. The credit downgrade structurally elevates variable borrowing rates. Yes, that's right. So their borrowing costs are going to go up because of that. Here we go. Competitor proliferation. Reduce barriers to market entry, enabling nimble, specialized players on Hoka, which is Deckers, Lululemon, and Brooks to chip away at specific sports categories. All right. Supply chain concentration, where 59% of production is bottlenecked across just 4 primary footwear contract manufacturers located in Vietnam, Indonesia, and, well, China. Congratulations, you played yourself. Yeah, so like strategic opportunities found here, marketplace reset, tax reform windfalls, product rebalancing, targeted demand reinvestment, and sub-brand resiliency. No. So the make or break catalyst, tariff defense, which would be successfully implementing alternative country of origin shifts or manufacturing cost mitigations to absorb incoming cost shocks in cost of sales. Then there's the wholesale stabilization, regaining premium shelf positioning within independent multi-brand distribution partners without completely cratering retail gross margins. Yes. Put the things back in stores and stop it. Okay? And the innovation engine, I'm going to be honest with y'all, I don't take this seriously with Nike. I don't. I'm sticking with inventory management and wholesale stabilization. I'm sticking with those two things as the main thing. Talk to me, Cecily.
a question for you. So
Yeah.
I did get up for a second, so I hope I didn't miss this, but I did not hear it mentioned this time any issues with the Chinese customer, because remember when they were starting to hit those headwinds hard, China was going into a recession and a lot of sales had dropped off.
Yeah.
So I think that's no longer an issue and not a make or break thing anymore, if it ever was.
Yeah, I think it was a make or break thing then. And yeah, I didn't see any mentions of it here either. Yeah, no mentions of it here either. So yeah, I think they were able to resolve that. The one thing focus here they say is the forensic signal demonstrates that all of Nike's operational challenges, digital channel margin erosion, over promotional wholesale clearing, inventory obsolescence, and regional revenue drops are downstream symptoms of a singular root problem: product stagnation. All right, that is the one thing focus right there. Okay, so that falls right in line with what we're talking about, right? If Nike successfully designs, scales, and markets high margin performance first, well, they're going to go with innovative products. It triggers a chain reaction, full price platform discipline, is naturally restored, brand equally heals, reliance on retail discounting breaks, and the business regains pricing leverage over both wholesale distributors and regional competitors. If this single catalyst fails, increased marketing spend serves only to amplify a stale product story. Product innovation is the lead domino that forces all other performance metrics to fall back into place. Okay, I can see that. For me, it's still going to be um, getting back on shelves, the wholesale channel. But again, along with products, but I think Nike has enough products and enough products that are always on the way out. You know, so the innovation piece, I think, um, can in many ways, um, like you know, they might need to innovate in some other area, and then I could think about that. Like, so, like, let's say, you know what? I would like to see Nike get into sports medicine a lot more. Let's focus on something like that. Um, so let's do some.
Yeah, sports medicine.
Yeah.
What's that?
So basically, what a lot of these companies do, like Gatorade, for example, right, is they build facilities um where athletes can come in and they can actually work on their performance,
Mm.
right? And Nike, I think, has at least one facility that I know of. Let's get more. Let's get more of those. Like players can go in and like they got these like specialized treadmills and they hook them all up to like you know these leads that track their body function while they're performing at high levels. And sports medicine would also include you know um like injury. Like if they wanted to like they wanted to like help them recover from injuries and stuff like that. You know what I mean? Like stuff like that. So performance and rehabilitation. I would like to see Nike get more into that. And so what I would do is I would start to research Nike and find out what they're doing there. So I'm gonna write that down: performance and rehabilitation. And what I'm going to do is I'm going to research and see if they're doing anything there. We're not doing that. We're not doing that research tonight, but I want to know what they're doing in that category, right? And that's what I mean when I say you can have that one thing focused for you as well. So now I'm gonna go and I'm gonna look and I'm saying, is Nike getting into this? Is it a growing part of their business? Is it new? Is it old? Have they been doing it? Or have they just started and it's about to pick up? Right? I'm gonna research that. For now, obviously Nike is resounding no. You know?
Is what?
A resounding no. Right? But let's find out what they're looking like nowadays anyway. All right, let's find out. Maybe they're looking better than they usually do. Maybe they're back there.
Terrified so well, it's my start, but I'm about to start doing that. That's my butt.
Make sure those calls you sell are proportionate to the shares you own. Yeah? Meaning, it comes a point where based on how many shares you hold, right? It won't take anything away from you if the stock actually skyrocketed, right? Because you own those shares anyway. So you have you understand what I'm getting at?
Yeah.
So if I'm going to sell shares against a stock, and let's say I don't own 100 shares, right? Then there's that risk. So let's say you do own 100 shares. keep what you sell be proportionate is what I'm saying. Like
So
or-
I should sell if I have 300 shares, I should sell three.
right, exactly, right. Sell 3 contracts.
So look, what considering where the stock is now, I mean, I know you've never really been into the selling clause, but just try to humor me anyway.
I'll try.
So right now, Nike is 41.88, right?
Mm-hmm.
Just give me a second.
You got 3 minutes.
So it's Wednesday, 2026. So I was thinking along the line of doing them every 2 weeks. So if we are 40, $42, 21.88. We're at $42 right now. Do you think it would be? I mean, I could sell the $46 for
What's the delta? What's the delta on it?
23.
No.
Okay, so what should I be looking for?
Okay. The one thing about selling calls, right, is it's really all about slow and steady dividends.
Mm-hmm.
So do the math. If you took that $20 and divided it by the cost of that contract, what would be the percentage?
Yeah.
Take the 20 delta, which is $20, divided by the cost of that, right, 23, and divided by the what you would get. You said 60, how much?
69 cents.
So already right out the gate, that means I'm expecting like a 33% dividend. So, I mean, in reality, has a 33% dividend ever been, like just that good, or is there always something with it?
Well, yeah, obviously, something.
Always something with it, right? So I wouldn't sell that because I'm asking for too much.
Okay.
So try to dial it back. How much is Nike's actual dividend right now? Let's go check.
Give me a second.
I got I got that part. Stay where you are. The actual dividend right now is 3.9%. Right? Try to pull that dividend out the market. All right. So go down in strike, and yeah, it's gonna look like, man, that's nothing. It's gonna look like that. Yeah, sure, whatever. You know what I mean? But guess what? At the end of the day, you'll be able to stack that up faster, and you basically imagine you can collect the dividend 5 times this year instead of once. Better than nothing, isn't it?
Yeah.
Okay. I'm just asking for a friend.
So what I'm guessing is all the way up to like $50, which would be 20 cents.
And what's the what you call it?
Delta.
Yeah.
8.08.
So 8 divided by 50 cents, what do you get? So that's a lot better.
I said 20 cents.
20 cents. So let me see. But no, but you have a 20% probability of expiring in the money, right? So remember what I was talking to you earlier about? No, it's 8 delta or 20 delta?
8 delta.
Oh, 8 delta. So you don't have an 8% probability of expiring in the money. So you're pretty much selling somebody else something that you know is not going to win. You understand?
Mm-hmm.
So a lot better. All right. So yeah, that one goes. It looks like a 40%. Return on that, right? In essence, but like now, take that 20 by let's say it was that's 60. Divide that by the amount of contracts you have. Not contract. Divide that by the amount of shares you have, and that's your dividend right there.
Wait, 7 and
23 times, no, we said it costs 20, right?
Plus the contract premium is 20 cents.
20 times 3, right? And divide that. Well, I'm using that as an example, right? So 20 times, however many contracts you're going to be selling, right?
20, not 20.
Yeah, 20. No, the actual 20, like actually 20, not 0.2. Multiply by the number of shares number of contracts you're gonna be selling, and divide that by the amount of money you have in Nike, and then that'll give you a better idea. Now you're like, okay, cool. Now I know what I'm expecting here, and you can compound that.
Wait a minute, so I'm saying that's right. I can't. So it should be 20 divided by 5 shares. Not 5 shares divided by 20.
Yeah, no, right, yeah, no.
So it's 20 divided by
No,
5.
not the amount of shares, but the amount of money you have in Nike.
The amount of money
Right.
by position total?
Yes.
What? So is the total where I am now or where I started?
No, where you are now. You can't go where you started because that's over with. That's done.
So right now,
And then you do that, and then you know what kind of. But if you were to do the 60, was it 60 something, 63 or something like that, right? 69, right? Divided by where you are right now, you can see the big difference in the dividend. Well, actually, it'd be about a third.
okay, so it's 20 divided by. I don't understand.
That's you did it right. That's your yield. That's your yield.
That's less than 1%.
Good.
Less than 1%.
I know that. I hear you.
Oh no.
Okay. It does. You okay? How long is the contract for?
2 weeks.
Exactly. It makes perfect sense. If I compounded 2 weeks, 52, that's 26 times a year. I can compound that. Okay. Let's do this. Watch this.
Okay. What?
There we go. Let me show you something. So we're gonna go with 26 times, right? I'm just gonna say it's $1,000. It doesn't matter, right?
No, it's something higher. So
No. No, we're looking for the percentage return, right? Let's say that's 26, and then 0.5%,
26.
and then I'm gonna do 0.5%. So by the end of the year, I would have a 13.8% return on my Nike stock if I did that once every 2 weeks. You understand? So that's for 0.5%, less than 1%.
Really?
Yes, I would end up with a 13.8% return by the end of the year. What's your return been on average lately? Let's not go there, right? So we know this is better, right? Plus, you still get the dividend they gave you, so that's your total return ends up being about 16, almost 17% by the end of the year. Like, but if I was to say, oh, let's go for the, so now I would have to triple that. So let's go 1.5. Because the 69 is pretty much 3 times as much. That's a 50% return by the end of the year. I know I'm going for too much here. Something's liable to go wrong with me. I'm going for more than a 50% return the other way around. You understand what I'm saying? So, like, you got to be careful with that. Like, the goal is to sell something that's most likely to lose. That's the goal. You realize that?
Yes.
Sell something that's going to lose, right? Because I can compound that, Like I said, 13.8% by the end of the year for a 0.5% return. Right? So now you do yours, put it in the same thing just like I just did it, and do yours. 26. So I put, so even though it says months, that's just 26 trades.
And so, but
No, the return will be the same.
once you your calculation for business period, you're going to 13%.
Mhm.
How would I? It's gonna matter what the variable value as.
Yeah, doesn't matter. Right. That's why I said doesn't matter.
But
Right. Right.
for 20,000, it's always going to be 13%.
Right. Like watch. Right. Like watch. Like I'll put it back to 0.5. All right. Remember the number is 13. 13. Yes, it will. Matter of fact, I actually showed you guys this before, and I tried to tell you all about this before. That growing your account by 0.5% per month beats the market. Literally beats the crap out of the market. Beats the bricks off of the market. I'm sorry. I meant per week. I meant to say. All right. Now watch this. So if I change it to 2,000, let's say change it to 200,000. Right? It's got 227,691. Right? So take 27,691 divided by 200,000. Tell me what you get. 27,691 divided by 200,000, and I get 13.8%. No matter how much money you put in there, it's the same return.
Where about those numbers come
It's just random numbers.
from?
It doesn't matter. Right? The point is, it's going to end up being the same return, no matter how much money I put there. No matter how much, you get the same return.
And
But you want to go with what you can guarantee yourself, or well, near guarantee yourself. Obviously, nothing's a guarantee, but the closest you can get to a guarantee without going so low that it's nothing. All right. So I mean, I think you're in a good spot there, because pretty much anything below 15 delta, starts to become a pretty decent bet. Because 15 delta is like 70% of all outcomes happens in 15. So there's a 70% chance it never even makes it past 15 delta. So there's a great chance it doesn't make it to 8. Does that make sense?
that last part did not.
There's a 70% chance it never makes it to 15 delta, which means that there's a even greater chance it never makes it to 8. But it's never gonna hit that strike. All right. But your 3 minutes are up, ma'am. Okay. So, be careful. Don't overdo it. Don't get greedy. That is it. That is all. All right. So, does anybody have any questions outside of this? I know that was related to Nike. Any other questions that we have for tonight that are on our mind as far as like the lesson plan is concerned?
I have a question in regards to what you just mentioned, just discussed.
Yeah. Okay.
Yeah, I was trying to follow. It's just this Delta thing. I've written down here contract premiums has a number of contracts.
Contract. You said contract premium?
Yeah.
No. I told her to take the delta and multiply by the number of contracts.
Okay.
Yeah. No. You're right. I'm sorry. You talking about when I was telling her to calculate her return? You talking about?
Yeah.
Oh yeah. Yes. Contract premium. Yes. Contract premium.
Okay. Because I'm trying to figure this out. The whole confidence and all stuff gets sold off.
That's because you're doing exactly what I'm telling her. Like you're going too close to being in the money. You're letting them win, literally. Like you're going so close being in the money that you're guaranteeing that they're going to beat you because you're too anxious to get the money up front. What you really need to keep doing is selling them something that's not going to win. You keep your shares and you take their money. That's the name of the game. Keep what you own and take what they gave you.
Right? Without knowledge of all this other stuff, only thing I've basically been doing is looking at the price chart
Right.
and seeing an upward momentum
Okay.
and drawing the projection line to see where it will be, where I intend to, buy, where I want to set the expiration date,
Okay. Okay.
and then look and set a price above that. Yeah, you're right. I was probably too greedy.
Yeah. It's listen. You see me just told her the same. What's the last thing I just told her? Don't be greedy, because you're gonna end up like, imagine you sold somebody a contract, right? For for her, let's say it's $50 a pop, and it ends up at well, not $50, $45 a pop. It ends up at $55. She got to sell it to them for 50. All right. Um, that's not the best case scenario. The best case scenario is I sell them a contract for $55. It never gets to $55. I keep the money, right? And I get to do it all over again. And I just keep doing it. And I just showed you how compounding 0.5% every 2 weeks gives you almost a 14% return. I mean, that means if I do that for every year over 5 years, I would double my money. Yes, that's what that means. I would literally double my money if I just took that 0.5% every 2 weeks for 5 years. I'd double my money. She could double her investment on Nike right now, just for the next 5 years, selling those same contracts.
Nine years?
That's 5 years.
That's not bad.
Hmm.
I'm sitting here contemplating that without.
Like I don't talk about it much because I don't do it. But I mean, I know how the game goes. I just don't. It's just not my thing. Plus I have my shares loaned out, so I still get money off my shares anyway. So like without having to do this, I just loan my shares out. So between that and the extra money I get from the interest on my cash and the dividends I get paid out, I'm too burnt to be focusing on trying to, you know. Plus I don't know why I just love buying options. Something about it for me. Something about it. But I'm gonna buy some Virgin Galactic shares and sell those options to somebody for $8. Sell them for $8. I'm joking. That was inside joke, huh?
I've been looking like, see what those option premiums looking like.
Mm-hmm. What's up, Keena, Flora, Brooklyn, Zachary, Blanc, Prince, Skull, Terrence, Jose? All right. Let me check this. Let me check the chat here. See if anybody's got any questions over here. And yes, it was Benjamin Graham and Munger. I saw that, April. So no, Zachary.
Looks like, I have a fund really. That's, but it was about COC. I'll come free.
Give me 1 second first. And then we'll go. Let me close out this first. So for those that are on Twitch right now, I don't want to keep this stream going too long. I got to upload this to YouTube for you guys. So I'm going to end this stream here. I will see you guys again. The next session is going to be on Friday. Okay. And on Friday, we're going to be talking about. Let me get this here. 1 second. Our Friday lesson's going to be the technical footprint. Yes, we're gonna talk about some of those technical pillars within the investment model, and this is going to be a very important class, guys. Very important because that class is going to be about pretty much timing your investments. So you definitely don't want to miss that, right? Like knowing when to make those investments. So you may find all the stocks you want to find and stuff like that, but when do you start buying stocks? So tune in. All right, 8 p.m. Friday. I'll see you guys there.
That's that one because